Yo, what's up, you guys? Welcome back to a new weekly market breakdown where we take a look at the market from a technical as well as a fundamental perspective and look for the most highest probability setup moving forward there as well. Today, we've got the dollar index, the Nasdaq, Dow Jones, S&P 500, as well as gold on the watch list that we are going to take a look at. Without any further ado, let's jump straight into the information. So we're going to start with the fundamental information and then come back to a technical analysis there as well. Firstly, last week we had the Empire State Manufacturing Index coming through at a negative 31.8 versus the negative 3.7, higher than anticipated, but more negative than anticipated there as well. Core retail sales dipped 0.4%, wasn't expecting anything from that. And then the retail sales month over month also dipped at a 0.4%. Unemployment claims came through at 242k, lower than anticipated, versus the 253k that the Dow Jones anticipated there as well. Also, more data coming through. It just shows that when you have a lower unemployment claims data reading, it means that less people are filing for unemployment. But we can obviously see that based off the made up NFP data that was released a couple of weeks ago there as well. Obviously, Powell came through with some comments. Mostly, we know that we have got the debt ceiling that's coming through on the 1st of June. So it was just giving people some sort of talks there as well. Headlines for this week was gold gets a lifeline from renewed banking jitters, and obviously Powell coming through there as well. Gold on Friday rallied 1%, recouping some of the losses from earlier this week on renewed worries about stability of the banking sector, while traders slashed bets for another interest rate hike following remarks from the US Federal Reserve, Mr. Powell there as well. We know that Powell is coming through back again next week, Wednesday at 8 o'clock, to obviously give us some further insight in terms of what the plans are for the US economy to recover, whatever it is that they got going on there as well. Next up, the stock market on Friday, was lower as the GOP negotiators halted the debt ceiling talks. The S&P 500 had their best week since March. It says here stocks fell Friday as the GOP negotiators halted ongoing debt ceiling negotiations, stoking doubt of a deal being reached soon. However, the S&P 500 was like, you know what, you guys can talk, I am out of here. Dow Jones was not so lucky. The Nasdaq also down 0.24% respectively. All three major averages kept the week with gains. The S&P was up 1.65, the Nasdaq 3.04, and the Dow Jones only 0.38% there as well. Now, you look at the Dow Jones, was up to 0.38%, and most traders are looking to make 5, 10, 20% in a single week. Next up, what we got over here is we obviously know that next week we've got the flash PMI services, which is the Purchasing Managers Index. We've got the flash services there as well. Got the FOMC meeting minutes. We got the prelim GDP quarter over quarter, and another unemployment report coming through, and then the core PCE price index coming through also month over month there as well. Obviously, the dollar rallied as we anticipated last week. If you checked out the breakdown that I did on Sunday, and I explained all of the reasons why we can see this move go to the upside, and that is exactly what the market has given us. Now, that's not the only thing the market has given us. The market has also given us a good pullback in the market there as well. So hopefully we do expect the market to now continue the bearish momentum that we anticipated. Now that we got a 61.8 pullback on the weekly time frame there as well. If you did enjoy if you were able to get into last week's breakdown, please let me know down in the comments below. Also, if there's any pair you would like for me to break down, let me know in the comments below, and I could potentially make more videos throughout the week as opposed to just waiting for news to come through as well. And if you do enjoy the content, please do subscribe so that you don't miss out on the next video there as well, and hit that notification bar also. Now, let's get into the technical analysis there very quickly. So obviously, we're first going to look at the dollar index. The dollar index obviously came back and hit this level of support. And if you remember, I explained the move to the upside. And basically what we had over here, we obviously had a clear impulse. So after an impulse, you expect a correction. Now the market had completed the correction. If you take the Fibonacci from the high to the low and you look left, you can see where the market broke below this level of support, came back to test it as resistance. Apart from that confluence, we also have the confluence of the 61.8 that the market had hit. So we definitely expect a pullback to this level going into next week. And then from there, we can obviously monitor the price action once again. And then I'll give you guys an update as the news does come through there as well. Going down on the daily time frame, what do we have? Now, from a daily perspective, you can see how the market basically rallied out of this zone. And if you remembered, I did say when the market was sitting at this level, we're going to see the market continue higher. I was looking for this level. I do expect a pullback into next week before the continuation to the upside there as well. However, there's two ways in which the dollar can pull back potentially there. However, I would like a deeper pullback for the market to come and hit this level here as well. But I would say just monitor the price action. If we do break below this level, then you can definitely expect the market to continue lower there from a daily perspective. Also, let me just add some color on here. Also, there we go. Also, don't forget, if you are looking for funded account passing services, we do now offer the FTMO, MyForex funds, the big prop firms. I will leave a link in the description below in the comment section, and you can go join a group on Telegram where we publish all the daily updates there as well. Next up, we've got the Nasdaq. The Nasdaq price action, if you remembered, also the market was sitting at this level over here, and I said we can definitely expect the market to move quite up until that level. That is exactly where we went to, right? Obviously, the clearance that we were looking for has obviously been reached at the moment, and I do expect a pullback on the Nasdaq 100 as we speak now to at least the 0.382. So what we have over here is we've got a marker that had broken above this level of resistance, and we do expect a pullback to test as support. If you do look left, we also have the structure that we have to take into consideration here as well. You get a massive impulse. After an impulse, you expect a correction. If you take your Fibonacci from the low to the high, what we do have here is a 0.382 confluence lining up perfectly with that previous level of resistance that is now turned support. However, on the weekly time frame, we can also see that this is also the level that the market had broken above. Unfortunately, the rules of price action does not justify for the market to not always come back and hit this level. So I would expect a deeper pullback, maybe potentially for the market to come and hit that level. But for now, I will anticipate a 61.8 pullback before any further continuation to the upside. Alternatively, if we do get a deeper dump, I will expect the market to come and dump to this level here, because it's basically how the market works, right? So I'll tell you what we call this. It's called a profit taking. So you have investors buying the Nasdaq at a lower price. The price rally, they take their profits. They've made enough money. Now they're looking to buy the market at another lower price before the next rally come through there as well. We've got the US 30. US 30 is now pulled back to this previous level of resistance that got broken over here, and it's now turned support. If you go take a look at the weekly time frame, we can obviously see that we have the possibility of the market just completing this inverted head and shoulders pattern. Now, an inverted head and shoulders pattern is considered a bullish pattern from a technical perspective. And if you take your Fibonacci from the low to the high, you can see we did get a 0.382 pullback, and we are going to use this as our target level for the next move to the upside. And if you go down on the daily time frame, what do we have now? From a daily perspective, it's quite clear that we can see the market had now broken above this level of resistance, came back to test it as support. We had a massive impulse. After an impulse, you expect a correction, and if you take your Fibonacci from the low to the high, you can see the market did come back to test and reject the 0.382 as a retail trader, if you are looking to go long here, I would probably anticipate the first move for the market to go and hit this level over here. From there, I'll give you guys another update with the next move or the potential break above this strong level of resistance for the market to potentially continue higher there as well. But for now, we are going to be reactive and not predictive, and we need to learn to obviously adapt to how the market moves here as well. Next up, we do have gold. Now, gold, I said, was going to rally lower. I was obviously expecting gold to rally till here, but it's okay. We also got a market that did just hit the strong level of support. The market also broke below this level of support and came back, tested it as resistance. I do expect a deeper pullback for the market to hit that level. You have an impulse, so if you take your Fibonacci from the low to the high, we have a 78.6 pullback that's lining up perfectly with this level over here. This level over here acted as a strong level of resistance. Mark broke above that, tested it as support, broke below support. All of that supports now turned resistance. So I do expect a deeper retracement from gold before we get a potential continuation to the downside. Now you might also look at this level here that you have to take into consideration also, because the market can easily just melt to the downside to come and actually hit this low right there. Alternatively, basically wait for a daily candle that closes above that level, then you can get straight into the buy. Alternatively, you can wait for a pullback and then that continuation to the upside. Next up, we do have the S&P 500. Now, the S&P 500 most recently broken above the strong level of resistance that it was stuck in for multiple times. The next level that I do anticipate the S&P to go is to that level. Now, if you go on the daily time frame, what do we have here? Now, from a daily perspective, it's quite clear that the market had broken way above this consolidation phase that it had reached in. If you take your Fibonacci from the low to the high, we can see that we do have a 0.382 pullback. I do expect a further deeper retracement from the S&P 500 going into next week before we see this continuation to the upside, as opposed to as opposed to the market just hitting that level. However, what I would suggest you do is, if you do want to get into this market, always just monitor the price action around this level here and then see if you can potentially get in there. It's so important that you always monitor the price action, obviously, to wait for the market momentum to shift and not just get into it because we're trading at a previous price action level there as well. Guys, that is it from my side. If you enjoyed the video, please hit the like button. It just in that way helps the YouTube algorithm to show this video to more people. And also don't forget, we also have the HFT system that I'm giving away to 2 lucky winners. Make sure you sub to the channel. That's about it. You don't have to do anything more. Okay, thank you for your time. That's all from my side, and as always, cheers for years.